Hello everyone, welcome to the Ichimoku charts.com daily analysis for the S&P 500 for Wednesday, October 9th, 2013. Well, a continuation of the trend to the downside today, and a candle has made a lower high and a lower low. A small black body candle, however, almost a doji type candle, and that denotes a candle of indecision, and very much indecision. And it's not surprising following a very large candle as we saw for the previous day's trading. It's very difficult for buyers or sellers to maintain such a strong move in a very short period of time. And this suggests that there have been buyers coming back in down around the 1654 level. For the previous day's trading, 1654 was a barrier to the very substantial sell-off we had, where the sellers had taken control of the market. And for today's trading, the market has tested down below there and has been rejected from there, failing to close down below that level once again. Now, we've done that on this doji type candle, and dojis are candles of indecision because of the small body, and the small body suggests that the large amount of net momentum that the sellers had for the previous day's trading has essentially dried up and become insignificant, and that sets the market up for a potential change of trend. It suggests that sellers are no longer strong in this market. It doesn't say anything about the buyers. The buyers are not necessarily strong at the moment either, but the story here is really about the trend being down and the sellers not being strong any longer, and that offers the potential for a change of trend. We also have the largest shadow on the bottom and on the top, and in this case it's slightly larger on the bottom, suggesting that the sellers have lost commitment down at these lower levels. And considering the market is trading within this large highlighted zone that has been an area of previous support and resistance, it's little wonder that we have seen some buying coming back into this market. Having said that, however, we do have downside price rejection. The buyers have lost commitment up above the cloud, and the top of the cloud here saw the market break out to the upside and failed to close up above there, so that's quite significant at the moment. So we have this battle going on between the buyers and the sellers, and resolution will be either the trend continuing down or the trend changing to the upside. So very strong barrier overhead with the cloud, but a very solid barrier down below where the market's closed at 1654 as well. In terms of the Fibonacci extension, and a significant move today with the market testing just down below the 161.8% level, being rejected from there on an indecisive candle, it really does set this market up for a potential change of trend to the upside. In terms of the Fibonacci retracement, however, it's giving us a slightly different story. When in expansive mode of that, we traded through the 161.8% previously. That level, interestingly, is held as resistance, but we don't actually use the Fibonacci ratios in that manner because the trend is actually down. So we're looking at how the lows will interact with the market and how we close in relation to the Fibonacci levels. But our next target here is the 261.8%, so that's down below where the market's trading at the moment. There is some doubt about whether the market can trade down to that level. Now, in terms of Ichimoku, obviously still a neutral market in big picture terms. The market traded within the cloud for the previous day's trading and closed within there. Today we've closed within the cloud once again, so suggesting that we have a neutral market in big picture terms. The market attempted to break out above the cloud, as I've mentioned, and does suggest that the sellers have found the area above the cloud to be fairly strong resistance. With this indecisive spinning top type candle, and this is a potential Japanese candlestick reversal pattern, it's a potential harami pattern, we do require confirmation, and confirmation of the indecisiveness would be a change of trend to the upside. So we're looking for a higher high and a higher low, but the top of the cloud offers a very, very solid barrier to this market trading higher. If we do see a bullish breakout up above this area, we could quickly see the market testing up to 1669. In terms of the Kijun-sen, the pink line here, price action is below the Kijun-sen, so we have a negative market in the medium-term time frame, and we are trading down below the Tenkan-sen, the green line, so a negative market in the short-term time frame. Looking across at the Chikou span, that's above the corresponding price action, so it's suggesting that there still is some upside momentum in this market. But if this market doesn't trade higher over the next day or two, we may see a change in that momentum. And really what we're seeing here with this checker span trading above the corresponding price action is really contrary to all of the other Ichimoku indicators, so we don't have a lot of faith in what we're seeing at the moment. So quite some indecision, especially in the long-term time frame with the market trading within the cloud. If the market does rally, we have strengthened resistance around the 1669 level. We have the Tenkan-sen trading just above there, so that may offer itself as very strong resistance. Also just above there, the edge of the highlighted yellow zone that in the recent past has held as support may now offer itself as resistance if we do change trend, and that's up at 1675. And if the market does continue to trade lower, we have the bottom of the cloud and roughly the bottom of the highlighted zone trading around the 1635 level.